Welcome to the lesson 5 of week 2, and this is where we are going to wrapping up week 2. So far so good. I know that you are picking one thing or the other. Just give yourself time. This is not what you try to learn and scale through and start making the thousands of dollars, but these are the things that you need on your journey up. All right, so let's get to it. Today we are looking at economic news and events impacting the market. Economic news and events impacting the market. Remember, when we talk about fundamentals, this is what will help you understand more about fundamentals. All right, so today's session is all about understanding how economic news and global events affect forex market. The market isn't just numbers and charts, it's driven by real world events, government decisions, and economic reports. I know you already have a full in-depth or some idea about that when we spoke on fundamental analysis. So let's get into it, because at the end of this lesson 5, you will know which news matters, how it moves the market, and how you can stay ahead to make smarter trading decisions. All right. Number 1, why economic news matters in forex. So let's say you own a shop where you sell raincoats. On sunny days, you are selling raincoats, and you know that on sunny days you will hardly sell any. But when it rains, your sales is going to go up, right? For you, the weather affects your business. So in forex markets, the weather can be the economic news or event, because whenever they happen, they affect the value of currencies. When a country's economy is strong, the currency of that country, of course, it will go up in value. But when bad news hits that same country, the currency can drop very fast. So knowing what to watch helps us as traders to avoid surprises and even profit whenever this such news, whether good or bad, happens to hit a particular currency. Simple as that. Let's move forward. The second thing is types of economic news that impact forex. There are a lot of news, but some of them are not really, they don't really have that so much impact. Some are so impactful that when they happen, instantly you start seeing the result. Some over the weeks, because of what had happened, you start seeing the effect on the market. All right, so let's pick one. Let's pick economic indicators, reports and data releases. There are regular reports that shows how countries' economies is doing. Example, we have the GDP, which is the gross domestic product. We have the inflation data, which is called consumer price index, CPI. We have the employment data. I think I made int on employment data. And we have the retail sales. So let's look at this four. These things is going to help you whenever you start trading. Trust me. So let's just stick to it. I know it could feel like a little bit boring, but these are informations that will make you a better trader whenever you now go live or even start trading on that demo. All right, so let's pick the GDP, which is the gross domestic product. This measures the total value of goods and services a country produce. If we have strong GDP, the currency is strong. If you have weak GDP, the currency is weak. The inflation data, which is the CPI, consumer price index, it shows how fast prices are rising. High inflation, central bank may raise interest, which will signify strong currency. Low inflation, weaker currency. All right, so employment data, in America is called the NFP, non-farm payrolls. This measures how many jobs are added in the US. Strong job growth, stronger USD. Weak job growth, weaker USD. Retail sales is the next one. This shows consumer spending level. More spending, you already guess what it is. Strong economy, stronger currency. So whenever any of this is being announced, especially if it's in the US that affects the USD, you will see the impact in the market like instantly. The second one is the central bank decisions, which is the interest rate. Central bank like the Federal Reserve in America or the ECB in Europe or central bank in Nigeria, whenever there is higher interest rate, it can signify strong currency. That is, it attracts investor. Whenever there is lower interest rate, it weakens the currency. So central bank meetings often cause big movements. Whenever there is any news coming about rate cuts, there is always that big movement in the market. Number three, let's go into political events and global crisis. I think I mentioned this a time ago about when the Ukraine war started and how that impacted the market, right? So we can classify that into here. Events like elections, wars and conflicts, or natural disaster can affect the currency when it hits certain country. So for example, with election, when new leaders change, it can affect the currency based on how people perceive who is being elected. Just like we can see what is going on with the American currency right now, the USD, with Trump being president. Also, war and conflict. This creates certain opportunities. Investors move money to safe haven currencies like dollar, Japanese yen, and gold. Let me explain what this means. So when a news of war starts, big investors, people that has the big money, they want to put their money where it seems secure instead of probably, let's say, war hits, God forbid. But if war hits Nigeria today, nobody will be investing in oil at the moment because there won't be any exportation production going on. One thing they could easily think of is, oh, let me buy gold, right? Or let me buy more dollar and save. Exactly, that's what it means. And when it makes such decisions, we as forex traders can see it on the chart. So that's why it's important for us to pay attention to what news is going on around the world. There are websites where we check them. I'm going to give you all of that resources. When war is going on and we have the information, it helps us to make better decisions when we are entering into a trade. Then another one can be natural disasters because it can affect the country's economy, causing it to weaken when disaster hits some part of the country. The next one is market sentiment news. Remember we talked about sentiment as well, right? Great. So sometimes it's not just the data, but how people feel about the news. Let me break this down. So let's say any of this news happens and traders feel they still have the sentiment like, nah, it won't really change anything. They can still also have impact on the market since it is traders that makes the decision sometimes about what you actually see on the chart, especially in lower time frame. So we can have positive sentiment, okay, we can have negative sentiment. Whenever it's positive, currencies may rise. Whenever it's negative, currencies may fall. So for example, if traders expect the Federal Reserve to raise interest rates, the US dollars might rise even before the announcement because people are already going to be making decisions. We expect that the federal government is going to increase rates. The news are not dropped though, but the market starts moving. Sometimes in the chart you see it start moving, and then when the news drop and probably the rates, they did the opposite to just come down because sentiments were in the wrong direction. So all of that influence what we see in the chart. So how news moves the market? So when major news is released, three things will happen. Note these three things. Volatility increases, spreads widen. Remember I told you about spreads, right? And then fake out happens. Fake out is when we have analyzed our candlesticks. Remember those candlesticks where we proposed that, okay, whenever we see a marubuzu or an engulfing candle rather, it signifies change in direction, right? So let's say we see two big engulfing candles, but news dropped and it's, of course, we are trying to buy. Now it just goes opposite us. Some people might change their mind. Oh, it's now selling, and they start selling, and then it comes back in our direction. That is what fake out means. When the market did leg over for you, like, oh, I'm not going in that direction, this is where I'm going. That's what fake out means. So volatility increases, When volatility increases during the news, the price moves very fast. What is supposed to take like a 4 hour move normally without news can happen in 15 seconds, 15 minutes. Pooh, big candle happens. Then spreads widen. Our Euro USD, if you have been taking note of your Euro USD or your better trader, because I expect that you would look at them at least once a day, you will see that the spread when the market opens this new week, it might be $2, $3, $4, right? But whenever there's a news coming, it could increase to 8, 12, because brokers know that a lot of people wants to get in and get some opportunity, and then they are able to make some money. That's one of the reasons anyways. Now the third one is fake out. These prices may spike in one direction and reverse quickly. That's when you will see a wick very long. The candle was already having body, but then just wicked back. That is what fake out means. So for example, if US NFP, non-farm payroll report, is released at 1:30 p.m. GMT every first Friday, that's when they drop that report. If the report shows more job expected, the USD usually gains value fast. So some people are basically news traders. They like to trade when there is a news coming. For me, so far, your technical analysis is more important, because technical analysis will show you structure, and sometimes a fundamental that agrees with your technical can move the market in your direction even quickly. But as a new trader, I would not say trading news should be what you should be looking forward to. I'm just letting you know what when you see these things happen in real market, so that you understand what is really going on. All right. So how to stay updated to economic news? How do you know when this thing is coming? We have economic calendars. This tool shows upcoming news events. Some popular ones, like I said, I was going to share with you. We have the Forex Factory. We have investing.com, and then my personal favorite is my Forex book, my FX book. Also, there are other ones like Bloomberg, Reuters, CNBC, all of that. But my Forex book is what I love the most. And then also some brokers will send you notifications ahead of a trading news coming out. So look for these key details: time of the event, currency that will be affected with the event coming out, the expected data versus the actual data. If the NFP is coming out and we expect a result of 2.8, when the news comes out and it goes to 2.9, that's higher than expected, you will see how that will react in the market. All right. Then impact volume. When we check this news out, we'll do that on our live session. There are some news that are low impact, there are some that are medium, and there are some that are high. The high ones and sometimes the medium ones are what we want to pay more attention to. So as a trader, we are supposed to be well-rounded, because we know that this chart moving up and down was not just something somebody somewhere is just playing with. These are real life events happening simultaneously for us traders to make opportunities out of them. So trading during news events, should you? Number one of the benefits is that you are able to make quick profit, because market moves very crazily, right? If you happen to be on the right side, then you can make some money, and there's a lot of volumes going on at that period. But here is the downside: it is highly risky for beginners. Highly risky. I can't even overemphasize. I don't know how to overemphasize how risky it is to trade the news, because there is spikes going on, there is slippage going on, and it's just not necessary. It's not needed. There is no point coming into the market with the mindset of, oh, let me go come and get what I can get, when it is always here 24/5, 24 hours a day, 5 days a week, for you to catch your opportunities. Then there is a lot of emotional pressure. It's already hard when you are in a trade that has not gone into profit, and your mind is, as a beginner, you feel those emotions. Now imagine it's moving like weary, like sorry I had to use that word, it's moving like crazy. So for a new beginner, the last time I was in a trade before the news happened, usually my trading plan, by the way, some of the lessons we are going to take in is how you can set up a trading plan. By the time we take all of this, you would feel confident on, you know what trading is. So that was it. One of my trading plan is I don't trade the news. I don't open a trade 1 hour before the news. I don't enter a position during the news, and I don't trade 4 hours after the news. I let the market breathe. But this particular day, this part sometimes we break our rules too, but it's not a good thing. I was in a trade before the news dropped, so I didn't close my positions. I just put my stop loss. My heart was racing, but thank God it came my way. My TP was supposed to be $200. I expect it was going to hit like 200 3 days, but man, under 15 minutes, take profit. I closed and I was so emotional, and trading with emotions is not a good balance for whoever is going to be a good trader. All right, so you as a beginner now, there should be some news coming in this week. During our live session, we'll look at how to see what news is coming, and then would together look at how market is going to react to those news. All right, so I hope you have been doing the practical exercises that I've been given, because we are going to review them during our live session. That is what will help us anchor our live sessions better. All right, so number one practical lesson for this lesson, the practical point for this lesson is visit factory.com and check the economic calendar for the new week, depending on when you watch this video. But for the new week, check the economic calendar. Identify the ones that are high impact. When you go to the website, you will be able to just see on a glance. Identify the ones that are high impact and mark the time on your calendar. Set a reminder on your calendar on your phone. Then watch how the price affected currency moves when the news is released. All right, so take home. Number one, economic news drives the forex market. It can cause sudden price moves. Number two, major news includes GDP, interest rate decisions, employment data, inflation, and political events. Number three, use economic data, or rather use economic calendars to stay ahead of upcoming events. And lastly, trading news is risky. Observe first before diving in as a beginner. That will be all for now for week 2. I'll see you in the live session. Then I'll see you week 3. Cheers.